Welcome! Today we're conducting a deep dive analysis of iFlytek, a company that's really at a critical inflection point in China's AI sector. Our focus will be on dissecting the fundamental dynamics that are shaping its path forward.
So let's get right to the core finding. Our analysis shows that iFlytek is fundamentally a company of contrasts. On one side, you have this powerful strategic pivot toward the consumer market that's fueling some really impressive growth. But that's counterbalanced by persistent financial pressures that act as a significant drag. And it's this central tension, this push and pull, that is absolutely key to understanding the company right now.
To really unpack this, we're going to walk through four key areas. First, that strategic transformation. Then we'll look at its unique national security mode. After that, the financial tug-of-war. And finally, we'll zero in on the key metrics you need to be watching.
All right, first up, iFlytek's fundamental shift in its business model. The company is making a decisive move away from customized one-off projects and pivoting toward a scalable, product-centric model. And the engine behind all of this is their large language model, SparkDesk.
Now, what's the most significant outcome of this pivot? Well, it's that the consumer-facing business, or CN, has clearly emerged as the company's primary growth engine. And this is so important because, as you know, consumer products can offer higher margins and much more predictable revenue streams, which could fundamentally change the company's financial profile over time.
And the data here really tells the story. In the first half of 2025, the consumer business exploded with 38% growth. Now, compare that to the company's overall revenue growth of about 17%. You can see this isn't just a slight edge. The CN segment is playing in a different league entirely, and it's really what's pulling the whole company's growth rate up.
A perfect illustration of this is the company's AI learning machine. Sales revenue for this one product more than doubled year over year. I mean, this is a clear validation that their core strategy, embedding their advanced AI directly into consumer hardware, is really starting to pay off.
Okay, so let's shift gears and turn to what is perhaps iFlytek's most durable competitive advantage, something we're calling its national security moat. In the current geopolitical environment, you really can't overstate how important this is as a differentiator.
So what do we mean by that? This advantage is built on the idea of technological sovereignty. Because iFlytek has built its core AI infrastructure on domestic technology, it becomes the default trusted, secure partner for sensitive clients. Think government agencies and large state-owned enterprises.
This moat really stands on a few key pillars. It starts with a very deep strategic alliance with Huawei. That partnership allows them to build their systems on domestic Ascend chips, creating their Beijing computing platform. And the end result is a system that is independent from foreign technology supply chains and potential sanctions.
For clients in highly sensitive sectors, we're talking government, finance, energy, this guarantee of compute security is a decisive factor in awarding contracts. It clearly sets iFlytek apart from any competitors who are still reliant on foreign hardware.
But, and this is a big but, this compelling growth story and strategic positioning, they don't exist in a vacuum. They are in a constant tug-of-war with the company's underlying financial realities. And that brings us to the other side of this story. This slide really captures that central conflict perfectly. On the one hand, you have the positive story, strong top-line growth and a net loss that has narrowed significantly. But on the other hand, you have the challenge, a negative operating cash flow of more than 770 million RMB and a very heavy R&D spend, clocking in at nearly 22% of all revenue.
And if we look a little closer at the data, the picture becomes even clearer. You can see the operating cash flow did improve quite a bit from the same period last year, from a negative 1.5 billion RMB to negative 772 million. That's a positive trend. But look at this. At the same time, R&D spending as a percentage of revenue actually increased to almost 22%. This really highlights the pressure they're under. They have to keep spending heavily to fuel that top-line growth, but that in turn continues to burn cash.
Now, the company's official explanation for this is business seasonality. They argue that their cash collections are heavily weighted toward the second half of the year. The key question, of course, is whether that will actually play out. The market is watching very, very closely to see if that operating cash flow number does in fact turn positive later this year as they projected.
So, given this complex picture of growth versus risk, what should we be watching to gauge the trajectory from here? Our analysis points to a handful of key metrics that will signal which side of this narrative, the growth story or the financial drag, is starting to win out.
We believe there are four key indicators to monitor. First, and without a doubt the most critical, is the quarterly operating cash flow. Does it turn positive? Second, we need to see if the C-end business continues to grow its share of the total revenue pie. Third, you'll want to watch accounts receivable turnover. Basically, how efficiently are they collecting their bills? And finally, any signs of real progress in their early-stage international expansion efforts.
And that really brings us to the final forward-looking question. iFlytek's future trajectory is going to be determined by a simple yet powerful dynamic. Can its impressive growth engine ultimately pull the full weight of its financial challenges, or will the financial drag prove too heavy? The upcoming data will be what tells us which of these two narratives will prevail.